my test. Hello, guys, and welcome to the 85th edition of our Trading Opportunities webinar. And before I proceed, I'm just gonna check the microphone at my end. And by the way, if you guys are able to hear me, one second. It looks like I had some other video playing. Yeah, as I was saying, if you guys are able to hear me, do make sure to let me know in the comments while I'm heading over to YouTube on my cell and checking. So it looks like at least the video feed is working. Yes, so it is working in the audio front as well. So in that case, let's now proceed with the actual webinar, guys. And first of all, get done with the legalities. So here is the disclaimer on screen, which basically says that all content presented here is for educational purposes. I'm not soliciting buy or sell. If you do want to use the views presented here for your trading, investing, or any other purpose, you yourselves will be liable for your profit, your loss, or loss of profit. Rest of the content you can read over here on screen. And let's now begin with a little bit of introduction for those of you who are new here. And first of all, guys, my name is Nirav. I'm the admin and owner of 50 Eyes Market Analysis YouTube channel, where this stream is currently being broadcasted. We do go live every Friday. I should reduce the size of this thing 1 second. So we do go live every Friday at 2 p.m. GMT or 7:30 p.m. IST. So you can just convert to your time zone from 2 p.m. GMT, right? And I think this size is more suitable. Let's experiment today. Yes, so as I was saying, we go live on Friday 2 p.m. GMT. We have currently conducted 84 webinars. In the last 83 webinars, we have captured 143 trades, literally all discussed live, and some of them were even executed and closed during the live webinar itself, because I conduct these webinars during market hours. And lastly, we'll check what happened with the 84th webinar discussion today in the 85th webinar. This is also being broadcasted live on LinkedIn. Before proceeding further, do note that I have kept a record of all my past webinars since 2016, and the accuracy stands at 83, 87, 84, 84.8, 85, sorry, 88, 82. So since 2021, we have kept a track record of every single of these webinars with the date, instrument, analysis, etc., what happened, video link. And since 2022, we started doing these weekly webinars. So you can see the track record week by week, as I discussed, like 143 trades and so on and so forth. So this is above all industry standards, because we have 80% plus accuracy for 6 consecutive years, and this is a public record. So everybody can, or anybody can come in and check whatever I'm saying here, right? So that's about that. And let's now head over to a very quick introduction about the progression of the webinar. Will start with EURUSD, followed by crude oil, followed by gold and S&P and Nifty, and at the end we'll discuss BTC or Bitcoin. Do keep in mind that I do also have a private Slack group where I post my live analysis and trades day in, day out. And if you want to be a part of it, you can request details for it by heading to the contact us page and filling it out with the subject matter as inquiry for private Slack group, and I'll send you the pricing details, etc., etc. It is request only, so you will have to fill the form. So that's about it. And let's now head over to our actual first discussion of chart. Okay, I had to exit on gold when it tests the trend line, but it looks like I missed the exit because I was talking to you guys. So anyways, we'll see what to do with that. Let's leave it like that for now. Let's first of all, let me see. Okay, there is a comment from Louis, and Louis is saying, let's see if I can bring it on screen. Yes. Good morning to you, Louis. And now let's head over with our actual webinar content. Firstly, here on screen, we have the chart of Euro USD. So with the chart of Euro USD, what we had discussed last time was that we were thinking. Once again, I think I have two charts. Yes, yes, both are valid. So let me give you a context of what we were thinking last time when we did this webinar. The idea was that we had a wave Y completed over here. Let me also change the color here. So we had a wave Y completed over here, and we were thinking that this whole thing because it is sideways could just be a sideways progression for wave X. Now, once the wave X is complete, it could complete here, it could complete here, it could complete somewhere in the middle. Whenever it is complete, it is supposed to go and give another leg down like this. So basically taking out the last low. Now, since our last discussion, what has happened is the market has remained sideways. In our last discussion, let's just check. The date was 13th of October. And since then, as you can see, 13th of October is somewhere here. So yes, so our last discussion was somewhere here, and since then the market has remained sideways within this box range. Right, I tried to capture some moves here, but those were nothing special and nothing worth discussing. I believe the trades were nothing spectacular on this market, from what I can recall. So, what is the trading plan here? What's new that we can decipher from this market? There are, I think, two possibilities. Let's just discuss them one by one. First possibility is that the wave Y is here, the wave X is complete. Either complete or continuing is the saying I generally use. But in this case, if we consider it complete, then this becomes a leg down for wave 1, this becomes a correction up for wave 2, and it should follow through with a wave 3 down. Now, this is a straightforward analysis, and there is a counter view. So, not to get stuck in the incorrect direction, to play this out, to play this downtrend out, if it really does transpire in the actual market, I have placed alerts near the lows, which is at 1.0523, and last one is near the wave 1 low. So you can just mark it in your own chart. So the conservative strategy will be to look for taking sell trades below the break of wave 1, right? And that does not mean that it will be a successful trade. What that means is that then two possibilities, which are, again, I should discuss them with the box areas. So what can happen is that once we take the shorts, let's say on the break of wave 1, let's say over here in this circle, then the likely possibility is either the market will progress down for wave 3, which is what we are looking for. Second possibility is that the market does not progress down for wave 3, but rather it just continues within this box range. Let's say something like this. And this is the kind of thing wave X are known to do. They are just well known to just continue sideways because they are complex. They can keep progressing as more and more complex structures. So do keep in mind that even if we take shorts on the break of lower wave 1, it is not a confirmation of anything. So any positions taken in this counter should be short and taken with the view that either we can hold them if it does something like this, or we don't mind taking minor losses and then taking re-entry on another short side move. Right. So long story short, swing perspective wise, I think I'll be interested in taking shorts, but not big positions because of the reasons discussed. Second possibility, I'll discuss that very quickly as well. This is one. Second possibility is that the wave Y is complete here, the X is complete here already, and Z is complete. This is a little bit low probability because generally the wave Z, yes, it can go and complete with this much small movement as well, but generally I was expecting it to go a little bit more lower. So this becomes a low probability scenario, but if that is the case, then this will be your 1, this will be your 2, and it will be followed by up move. So we don't have confirmation for this, and I personally believe it is a low probability scenario. So I'm not gonna base my trades right now based on this. So we'll continue to observe the market with a little bit of a bearish sentiment in mind, and we'll look out for short trades as just discussed. So nothing else to add here. If you guys who are present in the live webinar have any doubts, you can just type it in the comments. Sorry, not comments, live chat section. And if you are clear, just type in clear understood something. And let's move on to our next chart of CL. So from a longer time frame perspective, this is the end of wave 3. Let's try something else, by the way. So this is the end of a wave 3. So this is our point of reference or the starting point of our analysis. What happened there? Yes. So from here on, we have the idea that we have a correction down. We have actually followed that live in all those previous webinars and captured actually quite a good number of short trades. But anyways, long story short, we think either the wave 4 is here complete or it's progressing sideways within this box range. Same idea as we just discussed on the Euro chart. Within all that, what we have is this point as our new point of reference, because from here we have a count which is suggesting that this is the wave A, this is the wave B, and then we seem to be having a no. It's possible, but it looks less probable. I just observed that. Anyway, so I'll just discuss it. So from here, as I said, we have an A up, B down, and C up. Now within the C up, wave C, I think I had some targets placed for it. Let's see what those are. So yes, I'm expecting wave C to end somewhere within this white box. Right. That's where I expect the wave C to complete or end its movement. So far, it is propagating within that white resistance zone. And what we have here is the possibility that it has still some upside remaining. It comes from the fact that if we count this structure from this wave below, we have a 1 up. Actually, I'll just change the color. 2 down, and then the 3 up is still propagating. So if we go with that count, we had the 1 up here, the 2 down, and then 3 is still propagating. Then there's a lot of upside, basically. That's what this count is suggesting. Because the 3 will be somewhere here, there will be a 4, there will be a 5. That's just one of the two scenarios which we are going to discuss. So that's, let's say, hypothesis number 2. So this hypothesis number 2 is suggesting that more upside is possible in this market, and we can see two legs in the other direction. We also have the target marked at around 892.63. So what I'll do is I'll just draw a line and type in the target. So this is where the expectancy is in case the market progresses in the other direction. Second possibility, as I was saying, was that this market from this wave below has progressed up as a possible diagonal structure, and it is not the most convenient looking diagonal, but it does fit the guidelines actually. So in case it is that structure, we can say that wave C is either complete or just about to complete, in which case the market will not go any higher. So basically what we have is two counter views. H2 was suggesting upward movement and H1 is suggesting downward movement. The clarity is here that in case there is a break of the last high, that is as per hypothesis 2, then we can go long above 91.277, which is, as I said, this high, and expect the market to go somewhere near 92.63. So that can give me some good scalp upside trades if that actually does happen. And if not, then I've already discussed the downside possibility or the bearish scenario on this counter, which is suggesting a diagonal followed by a fall in this counter. So that's about it for our discussion on crude oil. And let's move ahead with our next discussion. Well, I'll just finish some of this stuff that I had to put up on the chart. So with that, let's now head over to our next discussion of gold. And by the way, I think we were able to capture some good moves in crude oil. Let me just quickly go over the crude oil channel on Slack and show you. Target hit, booked profit on longs, and added minor longs. So that's just the trade. Where is it? Today itself, so I added the longs on crude oil around 90.90, as you can see, and then exited around 91.289 with the target hit. So this is the kind of analysis and live trades which I post in my Slack group. And as originally discussed in the starting part of the webinar, it is open invite only. So if you want to become a member, you will have to request details by heading over to 50eyes.com/contact us. As you can see, here's the link, and fill in the subject matter as requesting details for Slack private group. So that's about it for the last trade which we discussed on CL. Now let's head over to the gold analysis, where I actually have a long position as well. So gold, as I was saying, I do have a position on this counter long, which actually was entered a little bit like 5-6 minutes before the start of the webinar. And the idea was that I will exit that long over here. That is when the market hits the trend line. But it looks like I was a little bit late and the market hit the trend line when I was making the announcement. So I could not exit. So what is really going on over here? Let's just look at it from a bigger time frame in mind. Should actually switch to daily. I have some points worth discussing. So if you guys are following me, you do know that we have been following this market down via our weekly webinars, and then this leg up and then down, so on and so forth. But anyways, the thing worth noting here is, which I want to show, is that if you observe this part, we are on the daily charts, by the way, then you will find that on the daily chart, the market has not been able to sustain above this level of 1988, or let's just say 1990 for the sake of convenience. So every time the market goes above 1990, it sees a sell-off. This first happened in August 2020. Then in March 2022. And then around May. So this time again, it is literally at that level. It is at 1987. So I wanted to point that out, that this is a high probability zone of resistance. The market has been rejected from this zone 3 times so far, and fourth time generally we expect that this trend will be taken out. That is to say that the market will clear this zone, right? Now that's all well and good, but do keep in mind that even if the market has to clear this zone, it is most likely going to face some minor sell-off, right? And the counts currently are seemingly suggesting that. So now let's head over and look at the counts for this counter from this point of reference, which is at the price level around 1812. So this is our POR or point of reference, and I'll just change the color here. From here, what we have is a wave 1 up, a 2 down, a 3 up, 4 down, and this is heading up for the 5th. Now, if I remove all the drawings here and just look at the price itself, wave 5 has the possibility that it may have completed here as a very odd looking structure like this, but the angle for this diagonal is just too steep. It is not even 45 degrees. I mean, not even, I think, 30 degrees. So I will relegate this count by the guideline of right look from Elliott's original work. The guideline of right look basically means that count that does not look right has a very low probability of being right. Self-explanatory. But anyways, the point here is that I'm supposing that the wave 5 may be continuing to the upside, and I'm assuming that maybe this is the wave 1 up, maybe this is the wave 2. One second. Let me check exactly what I'm assuming. Yeah, that is the count. And I've messed up some stuff here. So the count currently I'm assuming is that this is the 1 up for the diagonal, 2 down, and heading up for the 3 of the diagonal. Basis of this count, I had entered long somewhere here. We'll look at that very soon. And the idea was that I did not want to take this position for way too long because, as I said, 1990 actually itself is a start of a resistance zone. So we may see bigger pullback, maybe not. But I did not want to hold this position on a Friday weekend. So the idea is that this currently is progressing as a diagonal, in which case we expect leg up, correction, and then another leg up. And if we draw the trend lines, let's say in yellow color, then it should look something like this. So that's the rough outlook I have for this market's progression currently. Now let's look at some of the data from the actual chart. I may be having some trend lines there. So as we can see here, the CN trend line is actually the 2-4 trend line. Projected from 3, it is giving us the resistance level. So this is your 3, this is your 4, this is your 2. So we project this line and then make a parallel out of it. Is that the 2? Yep. Sorry. This is the 2 here. Not that. That is the 2 of a lower degree. So anyways, long story short is that the market is already at an important resistance level, which is this trend line. And in this kind of scenario, as I said, if I'm expecting a diagonal, then I also expect that this market will most likely respect this trend line, right? So that's why I wanted to exit. I probably will exit now. I do have an opportunity here. But long story short, I'm not expecting way too much upside here right away. In case the market breaks this trend line, and establishes itself above it, like something like that, takes support on this trend line, then I'll be interested in taking longs again at the break of the high. But the position size I'm looking to keep is small. Reason being that, as I just discussed, 1990 is a strong resistance level start, right? So that's about it for our analysis. Gold limited upside, cautious entries, right? I am expecting at least one leg up, but remain cautious basis the daily chart analysis. And one last thing I wanted to check for myself: where does this resistance zone go to? So around 2062, 2047, and 2040. So we'll take it as 2040. So basically 1990 to 2040 is the resistance level. Worth noting here, every single time, this is daily chart, every single time it has gone from 2062 to 47. I believe it was 47 to 40. And I'm not taking the spikes in, I'm just taking the close of the daily candles here. So this has been sort of minorly bearish if you just consider a close. Anyways, did not want to get into all that. Nothing much to add here on this chart. And in case you guys have any doubts on this chart, those who are in live, they can just type it in the live chat section. Before we head over to our next chart of S&P's 500, which will be followed by Nifty and then Bitcoin. And by the way, this is the trade I had pushed. Let me see. Gold, gold, gold. There it is. So today I had another long which I had placed. It was placed within the same diagonal analysis. Was around 1980, and I think I exited around 1984 something. Yes, 84.57. Our minimum target was hit. And then I had gone long again, this time around 1987. So late entry. So this position I had entered was very small, right? Because of the late entry, the position was very small. And now it is at 1989. So what I'm going to do is just give me a sec. I'll just close it. And I seem to have some questions here. I want to close it because I can just enter later on. So this is a very minor profit, but I'll just update it in the group and then progress with the webinar by taking your questions. 15 minutes. And yes, guys, before we proceed, make sure you hit the like button, and I'll also request you guys to share the content after this webinar is complete. All right, so the post is done here. So let's see what the questions are here. So by the way, I am out of my long trades here, so I'll just remove the alert as well for this trend line and push one on the channel for exiting. So there's a question from Global Infotech Kumbakonam, any possibilities for a sell? Yeah, so as I just mentioned, 1990 itself is a resistance zone, and funny thing is that it has just touched 1990. So 1990, what was it? 220.42. So this is currently in a strong resistance level, and I'm talking about multi-year resistance on the daily chart. So you just go to the daily, or this is by the way weekly, and you will find that this is actually the level where the sell-off starts. Right? Everything above it is unsustained for so long. It was unsustained in 2020, so this is 2023, about 3 years now, right? So this is a strong resistance level, so I will not be surprised if there is a sell-off. As far as the counts are considered, we are just about to complete an impulse in the upward direction, and as we discussed, just roughly speaking, We had an impulse around 1811, and if it really is complete around 1990, then we expect a 50% movement, and the 50% movement is currently coming in at 1899, or let's say 1900. To 61.8, 1878. Let's say 1888. So yes, in case there is a sell-off, I'm not saying there will be, because the trend is super strong. Bullish trend, unless proven otherwise, we maintain the stance of bullishness. If the market does reverse from here, we expect movement till 1990 to 1800 levels, which will be actually somewhere here in the middle of all this. Hopefully that answers your question. There's another thing from Louis. He's asking, would agree that hold is due for a pullback. That hold is due for a pullback. Yes, pullback, I believe personally is definitely I'm interested in seeing a pullback here, even if this market is going to cross 2042. Because 2042, which is, by the way, long-term resistance, I'll just type it here. So the point here is that even if the market is going to take out the long-term resistance, it will need some, what do you call, buyers, aggressive buyers, let's say, and limit buyers. I mean, basically, it will need some buyers who are strong enough to take it to a new highs. And generally, during the process of accumulation, you will see some market, somebody call pullback, so that these buyers can acquire these long positions at a little bit cheaper levels. So I will not go into the whole theory. The general theory is that people who have purchased, let's say, 10,000 contracts here, they will sell 2,000 here. So the market gives a pullback. And when the market gives a pullback, they will acquire 7,000 contracts more and then take it higher. Some people call it manipulation, whatnot, but that's how generally things are supposed to be understood. Composite market operator theories, smart money concepts, big money, whatever you call it. So yes, long story short, and if we consider just the counts are also suggesting that we may be in the end of a move as a diagonal, maybe a contracting, maybe expanding. But diagonals, as per their name, ending diagonals suggest that maybe this is the end of the move, right? So I am personally interested in looking out for some pullback and then entering longs. But as I said, the market generally at these levels, because it has done this three times. It has three times taken resistance at 1990 to 2042. So it is possible that it does something unique this time and may not give us the opportunity. But anyways, that's what the weekdays are for, right? We'll just observe it Monday, Tuesday, every day and see what new things we can come up with. So there's another thing. I'm holding sell 1950. So I can't advise anything. I'm not your registered investment advisor, or I'm not even a registered investment advisor myself. So, anyways, the general disclaimers apply. I cannot advise, and discussions done here are for educational purposes only. So, moving on with the webinar, let's now head over to our chart of S&P's 500, where again I had some trades during the week. So let me just discuss the main theme here on S&P 500. What I believe is happening here is that we most likely are heading lower from this POR as a WXY correction. Sorry, WXYXZ correction. So we have already completed the W here, the X here, the Y here, the X again here, and this is supposed to be the low. Now, if this count is correct, then a WXYXZ correction in Elliott Wave terminology basically suggests that once the second X is complete, the new leg down is called a Z, and it will break the wave Y low. So if this is correct, then we are about to break the 4203 low. Okay. And it does look correct so far. The momentum is very strong. I am not short, by the way, here. I was short here. I'll discuss the trade later on a little bit in a few moments. But let's look at the analysis here. So the thing is, first thing to note here is wave axes are notoriously famous for being complex and deceptive. So while I have the major idea is maybe that axis complete, excuse me. So while I have the major idea that the axis complete, it is possible that it is just continuing sideways, right? In case this is continuing sideways, it can still propagate within the same zone, which is 14 4 sorry 4200, let's say roughly speaking, to 4400, about a 200 points range, right? So that's one thing to note. Well, keeping that aside, looking at the momentum, I do feel that this is done for here. That's my personal bias, by the way. This is just done here, and we are heading lower. Now I wonder why I did not enter shorts here. So anyways, the idea is that swing perspective is I'm looking for selling opportunities here only. Swing perspective means that my stop loss will be huge. It will be somewhere here near the upper zone, somewhere around 4360, roughly speaking. And that means position size cannot be too big. Okay. That's one thing to note. Now let's see some other things here. If we can figure out the Z. Yes. So the Z minimum target I'm expecting will be somewhere around 4140. That is basis this trend line. But we don't really need that trend line. I'll just draw this box and remove the analysis at once. What is that? Okay, so sorry, it's right there on screen. What I'll do is I'll just enter minor shorts here. Yeah, that is in alignment with my hypothesis anyways, so why not enter minor shorts? Alright, so I've entered a minor short position here. I'll just look to add more later on. Yeah, I was saying was that we have already figured out the targets for the downside. The target for the downside is coming around 40 to 10, which is kind of irrelevant because it's already touched. So we'll consider the lower level, which is 4116. So 4116 is our target for the downside if the things progress as we expect them to, or things go our way. So anywhere below, what is this? 4205 to 4116 is the target zone for the shorts. All right. So we'll see how things progress on a shorter time frame basis and look to exit shorts basis of this analysis. What's there else to add? Yes. And now let's head over and see my counts on this thing from this point of reference around 4400. So around 4400 or 4400, what I have on screen is a down, a B up, and a C down. And I was assuming it as a diagonal heading in the downward direction, but it has gone. I'll just draw the trend line so that you can see later on. It has gone a little bit too fast for a diagonal progression. Maybe it is one, in which case we'll see something like that, and then some more sideways movement before the fall. But as I said, this does not look very correct. The analysis seems to be pointing that this is actually an impulse and nested impulse, to be more precise. And this is not an A and B, but this is a 1 and a 2, followed by nested 1 2 1 2 in the downward direction. So that's about it for the analysis on this counter. And if you have any questions or doubts, you can just put them in the comment section. Sorry, live chat section. Mm. All right, guys. So now let's head over to our next chart, which is the chart of Nifty 50. And before we proceed with that, I'll request you guys to kindly hit the like button if you are enjoying the content, and also make sure to share this webinar once the whole webinar or the live webinar is complete with your friends, colleagues, or people who will find this kind of content useful, helpful in your Slack groups, Discord groups, Telegram, whatever you guys are using. Now let's head over to our next chart of Nifty's 50. So this one is not really moving as we expected or discussed in the last analysis. Last analysis, the idea we discussed were there was an impulsive count we were discussing in our last analysis, right? I did mention very clearly, I recall that the strength to the upside seems to be not very visible price action wise, and I did present some arguments basis of that. You can just check that in the last webinar. So long story short, I was not very convinced with the bullish hypothesis, although we had a main count as a bullish count, and it comes out that so is the case with the actual market as well. Market has not gone higher since then, and that has made me to update my current count. So let's just see what's the updated count from 20223 something. Speaking is our point of reference. And from this point of reference, we have our W here, and then I'm assuming that the X is over here, which is followed by a wave Y in the downward direction. Well, that's convenient actually. So a wave Y in Elliott Wave terminologies or WXY correction in Elliott terminologies will actually look like this. So wave Y will have three waves inside of it. First one is called an A down, B up, and C down, which will constitute the complete Y. So this will look something like this if this is the right count. Now, as far as this leg is concerned, I have already deciphered its internals. It seems like it has one leg down remaining, and my strong bias is that it is heavily likely that we are going to see 19,447 level to the downside. Now, it is also possible that the market just gaps down to this level. I won't be surprised if it does not, and if it opens somewhere in the middle, that will give me a trading opportunity to the downside. Of course, some other factors will need to be considered, but we'll see it on Monday open. But that's the important level, 19447. Afterwards, I believe what I'll do is remove it. So after 19447, what I believe is the correction might ensue, which will then be followed by another leg down. So that's the rough outlook right now. Again, it is also possible that the market just goes down a lot and then gives a minor correction before the last leg down, right? But the idea currently will be to look out for 19447, and if it is not touched, if the market opens above it, then we might get some selling opportunities. So long story short, Nifty short term wise sell, swing wise also possible sell, but short term wise higher conviction from my end is of sell side. And I also discussed 19447 as the temporary short term possible support level, right? Let's see if I have discussed. There it is. For the wave Y low, we will look out for 19134. Right, I might update it later on depending on the market situation, but for now, 19134 is the downside target in case this whole count plays out as it is. Right, so two ideas: one is for short term around here, and one is for swing perspective around here. So that's about it for our discussion on Nifty. Right, let's now head over to our last chart of Bitcoin. And as always, guys, if you are finding the content of use, make sure you hit the like button and also share the content once the webinar is complete. So here is the chart of BTC Bitcoin. So Bitcoin is sort of following the idea which we discussed in our last webinar. And the idea in last webinar I discussed was that the main theme which I discussed was, I must have discussed some alternates as well. Main theme was that this was wave A. This is our point of reference or the starting point of the analysis. And my idea was that possible triangle might be continuing for the B, and this was the A of the B, A of the triangle, B of the triangle, C, D, E. So basically, what I was saying was that this market can just continue sideways within the zone. Nothing new has happened. It is continuing sideways within the zone, and within that possibility, I also discussed from this point of reference the short-term count, suggesting that we have a WXYXZ heading upward. So basically, this is your W, this is your X, and this is the Z. Now we all know that wave Z will have three waves inside of it. So either that three-wave progression is complete because this is your first, second, and third, or you can just say A, B, and C in proper terminologies. Now, as I said, either the Z is complete or it is possible that this is just the A here and the B is still continuing sideways, which will then be followed by the C for the Z. Right. So what I'm basically saying is that Bitcoin, I am looking or waiting out for some selling opportunities. I have this red channel here, which once broken to the downside, I'll be interested in selling or taking out short trades, possibly. So this is the trend line, just in case you are interested. Once this trend line is being taken out to the downside, I will consider short trades. Until it is not, we don't have any short trades on this counter. It's a wait and watch at this point. And lastly, in case the market takes out 31,709 to the upside, then this becomes relegated, or the bearish count becomes relegated, which is currently like this. This is the bearish count. And if the market goes above 31,709, then this becomes incorrect. Not incorrect, I will say relegated. So that's about it for our discussion on Bitcoin, right? As always, if you like the content, hit the like button and share it with your friends and colleagues. As I said so many times in our past webinars, we are not getting very many views as should be after doing 85 of these webinars, right? So again, there's the what do you call request from my end, and let's see if you guys reciprocate to my hard work here. So that's about that. And lastly, as you guys already know, we do have a private Slack group. If you want to come in, join in, see my live analysis, etc., send in the request because it's request only to 50s.com/contact us by typing the subject matter as requesting details for private Slack group. This is the link, by the way. It's also on the bottom of the screen, on the scrolling text, and in the description of the video. So you can just click it if you're interested. That was that for our webinar, and thank you for joining in, and see you guys in the next one. Take care. Bye.